Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at a bear range. Now, at first, we started off looking at yesterday thinking, well, I mean, look at this drive down. Very strong bear move down, ended the day in a range. So today, we may be in a range, but we may be attempting to break out of it because the range after the big move is already done. A lot of times after a big move, you go into a range and then they either resume the trend or they fail and go the opposite direction. So having taken care of that all of yesterday, we opened up gap up in an otherwise bearish environment. Now, the first candle of the day really doesn't give us a huge clue other than the buyers and sellers kind of duked it out. We can tell that buyers probably tried. They bought into the end of the day yesterday, probably tried buying this morning, and the sellers kind of shoved them back. And all they were able to accomplish is a doji, right? A little bit of a bear body to it, but overall just a doji. In the grand context of things, we know that sellers are very obviously in control here, but we need to see a little bit more evidence than this, right? That's not good enough. The second candle, though, really proves the point. The sellers own the market and they are looking to drive this bad boy to the downside, at least to fill the gap, maybe a little bit further, right? So we get that big drive down, beautiful sell opportunity to fill that gap to the downside, and that's exactly where they found support. They filled the gap, and we see sellers taking profit, causing a bounce back up. Now, given the movement here, there were likely buyers that were waiting there as well, looking at this saying, well, they bought into yesterday's close. After all of that range, we had a nice rally, a pullback, and a big run higher. This is a good chance to reload, and maybe I can get my profit target back off at the highs. So buyers will be buying into this move, assuming they can maybe give it a chance to go into a range. Buy low and sell high, right? And then buy low again and sell high again, etc. So they bought the lows. I don't have this marked because at this point in time, we're still thinking bearish, right? There's not really a good reason to be a buyer here unless you're super aggressive and you have the account size to scale into it because you're probably going to take some heat. In this case, it was really gross and choppy back and forth, but it made it all the way back to the highs. So the buyers who did buy down here, they were able to get a profit target right off at the highs. If this is going to be a range, we should see the buyers be able to push through the highs and then fade back down to the lows. But they had an immediate rejection at the highs. That is a huge clue that the sellers, although we may be turning into a range, a slight transition into a range, the sellers are very obviously still hyper interested in this movement. And that allows you to sell into this looking for a continued drive down, maybe for 2 legs down, something along those lines. But very likely you're going to at least the prior low of day, just like we had the gap, and maybe a little bit further. Now, the problem is the sellers were a little bit overzealous on this one, and they slammed it down all in one humongous candle. Now, this massive candle to the downside is a little bit of a cause for concern for a couple reasons. Sellers know that we're likely turning into a range. It still has a bearish bias. You're better off selling on this kind of day. But the fact that they did achieve a breach of the high, even by 1 tick, proves that the buyers have enough strength to potentially turn this whole day into a range. So we have to be careful selling too far down. We don't want to be selling down here. It doesn't make any sense. We need to be selling somewhere up here to drive the market down to those lows. The second thing, huge bear candle, biggest bear candle of the day, right at the low of the day. After all of that's happened, all of the sellers who sold this one, who sold here, who maybe even sold the highs, they're going to take their profit on a candle like that, and it's very likely going to cause a bounce. This is further solidified by the bullish candle that followed. So we know that sellers are taking profit. Buyers may even be buying into the prior low of day, assuming that the breakout is going to fail. Again, proof of a range. So buying low, that's why I have it marked. I have it marked as a blue dot, though, because it is more aggressive. You're buying in an otherwise bear-dominated range. So you're better off selling, but I don't necessarily disagree with buying here in the context, right? So we get the nice pop higher, and the exact same thing happens. Big bear candle, huge bull candle. Normally, that would be seen as somewhat of a mirrored candle reversal, right? Down move equaled out with the up move, and you're expecting them to continue higher for about the same distance, right? Double itself up. But then they didn't get any follow through. And that is a huge red flag. Bad pun again, sorry. I'm good at those on these bear markets. Really bad signal for the buyers. And any buyers who maybe bought aggressive didn't want to wait for it to trigger one tick above it. They just bought the close of it. They bought all the pullbacks inside here. They're going to hate everything about this next candle. And that is a beautiful reason to sell, assuming that the buyers now know that they basically just got screwed and they're not going to want to hang around to find out what happens next. They're going to exit early to try to mitigate a loss. And that's going to cause a drive lower. For the folks that stuck around, maybe they bought here and they bought more here and they bought some more down here. Maybe they're trying to buy the close, filling that gap. They're going to try to get out at a break-even position, which is likely all this move is that popped higher. Because immediately after, just like we saw up here, absolutely no follow through, massively bearish candle to the downside, sellers swarming back in again, looking for another drive down. Now, where are we likely going? Well, we found support at the prior low of day. So between here and the low of the day, that's the area that we're looking for in terms of objectives. And that's a very likely place to find sellers pushing down to. Again, proof of a range. We need to be buying low and selling high. Selling high allows us to push down into that area of support for another beautiful bounce up. Now, this is another one of those situations where you could buy into. But again, you're going against the bear-dominated trend. We can see that there is now falling resistance in the form of a possible channel, if anything, maybe a wedge. There's not really a good reason to be a buyer down here because by the time you get a chance, there's just no more room, right? You ran out of room. And the folks that did buy into it, we can see that when it came up to the highs of that wedge, they took profit. So we find sellers immediately selling into that possible wedge high. Draw the gap across. We're finding support and resistance off that level as well. This is a cluster area of support and resistance. Now, the one issue that we run into is huge bear candle, no follow through. So we need to wait for more information. Just like right here, buyers who bought in aggressively, they got screwed. And we don't want the same thing to happen here. So no selling at the close. We need to wait for them to actually trigger in, and they don't, and it goes back up. So we need to wait for more information. They go back to the highs. The aggressive sellers that did sell into it, all they managed to do is get stopped out before heavy selling pressure came in, likely right at the highs into their stops. They accumulated their stops, and that means that they're looking for the lows of the day. And it caused a beautiful move to the downside, and that is a gorgeous reason to get in. And actually, if you missed that one, before it made it to the objectives of the lows, it gave you another beautiful little signal right there. Buyers try getting in. They get aggressive, buy early, they get trapped, likely going to be a stop run to drive the market back down. So just a beautiful combination today on gold of market psychology and technical analysis. You can't really ask for a much better day than this in terms of signals and in terms of clarity. They usually don't make it that clear, right? But in this case, really good example of all of that. So if you have any questions about it, feel free to send an email in. Hopefully you found it useful. Hopefully you learned something, and we'll see you next time.